Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday, the 2nd of December 2020, and we're looking at providing our normal midweek financial update. And in just the last 3 days, we've had a topsy-turvy gold and silver experience already. So let's take a look. Now, before we look at how well or badly markets and precious metals have performed, just a quick reminder that in the last couple of days, we've produced the following videos. Yesterday, Bitcoin 101, Bitcoin reaches all-time highs, and the day before, gold and silver slumps, China booms, and oil decision due soon, plus episode 3 of our Peak Silver series. And we've placed links to all of these in the description box below. Ironically, looking back on the past month, we've seen that the video that actually attracted the largest number of views was the one produced last week entitled $100 Silver. And just in case you missed that one, we've placed a link to that also in the description box below. But we're not advocating that we're going there anytime soon. Okay, back to our update. On Friday, gold closed at $1,789. And on Monday opened immediately down, dropping as low as 1,765. And there was a serious prospect of it falling below 1,750. However, yesterday it recovered, and today continued to rise to its current level of $1,829. Or at least that is the price as at 2100 hours GMT. Silver followed in gold's path, closing last week at 22.72, dipping on Monday to as low as 21.91, and then continuing to rise and now settling just off its week's peak at $24.06, a great recovery performance. We now have a gold to silver ratio of 76:1, which is an improvement when compared to it closing last week at 78.7:1. Equity markets are performing quite well, with the Dow Jones up 36 at 29,860, the S&P 500 up 4 at 3,666, and the Nasdaq down just 11 points at 12,343. All three indices just very marginally lower than Friday's close, and UK and European markets more or less pretty stable, some marginally up and others marginally down. The dollar index, though, is considerably lower, down today by a further 0.2 points at 91.09, and this compares with Friday's close of 91.79. So that's a 0.7 close from already a weak position. Now, before we look at gold and silver a little more closely from a technical point of view, perhaps we should assess what has happened so far this week as far as economic data coming out of the US is concerned. Now, we've seen that whilst the market manufacturing index for November remained unchanged, the ISM manufacturing index fell from 59.3% in October to 57.5% in November. Motor vehicle sales are also down in November by 0.7 million compared with October, and the ADP jobs report announced today is down nearly, not quite, but nearly 100,000 jobs at 307,000 for November. This does not bode well for tomorrow's weekly jobless claims, but particularly not so well for the non-farm payrolls on Friday. Now, going back to gold particularly, this is now a second day of rising prices, primarily because the US dollar has led itself to a 31-month low. The 10-day moving average level for gold at 1820 is now seen as support, while the 200-day moving average of 1801, that's $1,801, lie beneath it as additional support. To those new to technical trading, you may very often find that what one day may be resistance then suddenly becomes support the next day, and vice versa. Short-term momentum is positive, but the MACD is suggesting still further consolidation of prices. Silver achieved most of its gains yesterday, and today stopped close to the 50-day EMA. Silver is seen as being in a consolidation range, oscillating broadly between $22, which is the 200-day EMA, and $24, which is the 50-day EMA. Now, unless the dollar weakens further, then we may see a slight pullback from current levels in silver. But if the dollar continues to decline, then this will act as a tailwind for silver and gold alike. Now, we're still of the opinion that there will be oscillations in price, with no determinable trend for a short while, with prices more or less reacting to the dollar value and vaccine success. That said, though, with Congress working on a stimulus package and with some positive vibes suggesting a package close to $1 trillion being accepted, this could be the tailwind gold and silver needs, though 50% of Republicans in the Senate have apparently expressed to some reporters a lack of desire to offer any stimulus whatsoever. Now, whether that's fake news or not, it's difficult to fully ascertain, but a decision or agreement is not guaranteed at this stage. And it's this uncertainty is what is keeping the market so volatile. Now, Reuters just a couple of hours ago produced an update report, which we shall close this video by reading to you. It's only a couple of minutes long. And we also found another report while reading that one, which came out during the reading. So we shall read that one to you as well. So once those reports have been read, this video will then close. Meanwhile, please list below any comments you may wish to make, especially with regards to the future direction of gold and silver short term, what you foresee happening. And if, of course, you haven't already done so, kindly subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they're published. And just to add that either tonight or more than likely tomorrow morning on the Richard and Greg channel, we shall be publishing an interview I conducted last night with Brother Anthony, who, for those who may not remember him, is a property developer, and we actually talk about his experiences with Bitcoin. And it's been a mixed bag for Anthony, to be frank. So hopefully you'll pop along to the Richard and Greg channel and listen to that. Again, links to which we've placed below. So let's now move on to these two articles published by Reuters. Reuters article, dated December 2nd, 2020. Gold rises on stimulus bets, subdued dollar. Dollar trades near 2.5-year low. Britain approves Pfizer-BioNTech's COVID-19 vaccine. Gold firmed near an over 1-week high on Wednesday as prospects of a US coronavirus relief package reinforced its appeal as a hedge against likely inflation and sent the dollar to a multi-year trough. Top US economic officials on Tuesday urged Congress to provide more help for small businesses to cope with the pandemic, while support was growing for a $1.4 trillion spending bill. Spot gold rose 0.7% to $1,827 an ounce by 1:49 p.m. EST. Prices peaked at $1,832, the highest since November 24th, earlier in the session. US gold futures settled up 0.6% at $1,830. We're one step closer to the next stimulus package. That has weakened the dollar, eroding the currency and supporting commodity prices across the board, including gold and silver, said David Mager, Director of Metals Trading at High Ridge Futures. US economic growth is moderating as the coronavirus spreads and fiscal help fades, Philadelphia Federal Reserve Bank President Patrick Harker said on Wednesday. Raising gold's appeal for other currency holders, the dollar held near a 2.5-year low. Non-yielding bullion, which has risen over 20% so far this year, tends to benefit from widespread stimulus measures because it's widely viewed as a hedge against inflation and currency debasement that could result from the stimulus. The stimulus would drive some physical demand, encourage notions of problematic price inflation in the coming months, said Kitco Metals senior analyst Jim Wyckoff. Gold, however, registered its worst monthly performance in 4 years in November, weighed down by optimism over a vaccine-fueled economic rebound. Britain on Wednesday became the first country to approve Pfizer-BioNTech's COVID-19 vaccine. Elsewhere, silver fell 0.2% to $23.96 per ounce, though we know from what I've already reported that it has now risen from that level. Platinum rose 1% to $1,009, and palladium eased 0.4% to $2,397. End of article. Having looked at what Reuters said about gold and silver, we thought we'd also cover an article. It's literally just published, and you can see updated 7 minutes ago from the time of us producing this, entitled "Equities Hover Near Record Highs as Stimulus Hopes Build," and we thought we would read this to you as well. World equity benchmarks hovered near record highs, and the dollar hit fresh 2.5-year lows on Wednesday as investors weighed the first approval of a coronavirus vaccine and the prospects for more US economic stimulus with disappointing American jobs data. Britain's approved Pfizer Inc.'s COVID-19 vaccine on Wednesday, jumping ahead of the United States and Europe to become the first country to do so for the newly developed treatment. Inoculations should begin amongst the most vulnerable segments of its population early next week. US health officials have announced plans to start vaccinating Americans as early as mid-December, once regulatory approvals are in place. Early vaccines will help bolster the reflation and normalcy rate trade, which has been the key macro theme in driving equity markets, said Neil McKinnon, global macro strategist at VTB Capital. Yet disappointing private jobs data in the US kept a lid on gains and helped support safe haven assets. Employers added 307,000 jobs last month, well below the 410,000 expected by economists polled by Reuters, according to the ADP National Employment Report. The dollar index fell 0.104%, while the US benchmark 10-year notes last fell 3.32, so 30 seconds, in price to yield 0.9442. Up from 0.934% Tuesday. MSCI's gauge of stocks across the globe gained 0.27% following modest gains in Asia and mixed trading in Europe. On Wall Street, the Dow Jones Industrial Average rose 59 points or 0.2% to 29,883. The S&P gained 6 points to 3,669 and the Nasdaq dropped 5 points to 12,349. US stock benchmarks closed at record highs on Tuesday. General risk sentiment is unchanged. Perhaps there's a bit of consolidation today, but that's understandable given where we've come from since November, said Derek Harpenny, EMEA head of research for global markets at MUFG. The dollar lost more than 2.5% of its value in November. Republicans and Democrats in Congress remained unable to agree on a support package for the pandemic-hit US economy on Wednesday, with top Republicans supporting what the Senate's top Democrat dismissed as an inadequate partisan proposal. Spot gold added 0.7% to $1,828. US gold futures gained 0.72% to $1,827. Oil prices climbed on anticipation that the Organization of the Petroleum Exporting Countries, OPEC, will maintain production limits next year, and this was something we discussed in our weekly update. US crude rose 1.3% to $45.13 a barrel, and Brent was up at $48.20, up by 1.64% on the day. Oil has raced up nearly 30% over the last month. End of article. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice, and merely represent the personal views of its owners.